The following is a presentation of TFNN. Now, TFNN opens the door to the future. Larry Pesavento, systems analyst, is your tour guide into the market futures. Want to see into the future? Well, climb aboard Larry's time machine and come with us. Larry takes your phone calls now, toll free at 1-877-927-6648. This is the Futures Hour. Here's your host, Larry Pesavento.
Okay, good afternoon, folks. I'm going to, I already have posted the first chart into Tiger TV. It's from my friend Shane Schmolny. He runs wolftrader.net, but he does some really interesting work on the Federal Reserve and how they come into the market each day, how they spend their $85 billion or more each month. And this shows, as the market in the S&P starts to rally every time the Fed comes in. These figures are available. They're posted each day, I guess, at the New York Fed or through the Federal Reserve. I'm not sure. But anyway, this is something that Basil talked about before on his show, and it does show that there is some type of relationship here, that's for sure. I don't think there's any question of that. Okay, there's a couple of things I need to cover. One, last week on last show, we talked about the sugar market. We were down at that 1723 level. We rallied about $500, and we came back and made new lows yesterday. We're still at the 1723 level, so I still believe that this is a buying opportunity in sugar. That's the way it looks to me. I don't know if it's going to be right or not, but it certainly has a lot of support down here at the 1723 level. No matter what, you're only risking about $300 on this, so it's not very much at all. I want to cover something for those of you that don't follow commodities too much, because commodities are a really fun thing to trade and everything. But I want to show you how the margins are. I'm going to post the margins, the actual exchange margins, so that you'll be able to get an idea of how much these things cost to trade. And there's a couple of them that I wanted to actually go over with you, because we talk about them all the time here in Tiger TV, and I would I did. I lost my data. Hold on one second. It's hopefully my generator will kick back on here and we will be okay. If not, I'll just start to ad-lib everything, and many times that's probably the best thing to do anyway. Okay, I posted some of them in. I'm going to there's actually 3 sheets here that give you the exchange. Oh, brother. Hold on just a second. I have to rotate it. All right, I hit the wrong button again. Boy, it's tough being Italian when you can't walk and chew gum at the same time. Believe me, it's really difficult. This next one is important because it shows the margin on sugar is around $2,700, so you can become a farmer, for $2,700, which is really good. And so the last one I wanted to show you, which I think is the important one. Yes, this is the one that I think is the most apropos for what we do here, and that is the gold and silver margins, because we are looking at gold contracts have doubled in price. They've gone from $3,500 to $7,000. But look at the margin trading silver, folks. It's $12,000. It's almost 50% more margin to trade silver, and with more volatility. And so, to me, I think it's much easier to trade the gold, than it is anything else. That's just my opinion of what I'm saying. But these numbers are important, that you know how much you're risking. There's a rule of thumb: is if you take the value of the contract, corn, for instance, corn is trading for roughly $6 a bushel, 5,000 bushels. That's $30,000. And if you multiply it by 5%, that comes out to $3,000. And the margin on corn is $2,700. So using 5% as a guideline gives you a pretty good idea of where we're standing. Now, the first chart that I want to talk about is the one that was brought to our attention yesterday by Mr. Z in our beautiful chat room we have here at TFNN. He was talking about the gasoline futures at the 270 level. and the gasoline futures have already rallied 6 cents a gallon from that level. That was a perfect 76% retracement, and he brought it to our attention, and it was just absolutely spot on. When he was on the air, it was trading right at the absolute low, and brought it to our attention, and because of that big bar that we had down yesterday when the market was collapsing, he had the courage to step into it, and I suggested I'd rather wait one more day. I would have paid just a little bit higher than that, but it actually started to work quite nicely. Now your stop is in. You'd be basically at a break-even trade on the gasoline futures if you were looking at that. And so that's one of the things that we have to cover. Now I want to move over to gold and silver because we've had some real interesting things happening there. And if you'll give me 1 second here, I will put this in here. This is the chart that we posted yesterday on the show. Silver was making the bottom down at the 23.20 level. That was completing the bullish Gartley. The red line that you see on the 60-minute silver chart, that is the gold chart going back to the low that we made back on the 15th of April when we hit that low. So silver has not rallied very much. It's only come up, to make a 61% retracement, at the day on the day's range, and so that's really doing nothing very much. I mean, silver's still in a massive bear market, and so is gold, but gold still has a chance if gold can get above the 1480 level that we talked about yesterday. Then we would have a really interesting chance, for gold to have a really nice run, to much higher levels. I'm going to put the gold in next on the, I believe it was the hourly basis that we were looking at yesterday, and we will take a look at it here. Yes, it was. And I'm going to put two charts in on gold because we've had some interesting things happen. We still think that gold has a really good chance to get down to this 1386 level. So we'll be able to see if we can do that. I'll put the gold up chart. I'm going to put two gold charts up, and then I will re-enter the gold and silver. The first one shows the gold on the 60-minute with the big ABCD and how we reached that level up at the 1485. That's just the AB leg was $60, and the CD leg was $60. That gave us the number that we were looking at. Now today's action. I mean, this is from yesterday. We had that move down that stopped at the 50% level, and then what happened last night is the market backed off to another 61% level at the 1449 level, and then has gone up and hit the 1472 level. So it's made a perfect Gartley. We're still in the downtrend in gold, folks. This is at a real critical level that we are here. We need to get above 1485 or so in the gold, and then it has a chance to have a pretty good run, in my opinion. That's what I would be looking at. I will put up the silver chart one more time because I've had a request to put up the gold and silver chart, and since I have it in file, it should be easy to do, and then everybody can see it. And there we go, and you'll be able to take a look at it. You'll see that the fact that the silver is lagging gold again, and that's the main thing. Because silver is an industrial metal, folks. It's not a commercial methods thing, so you just really can't. And believe me, when you got a $12,000 margin and the volatility is that great, you don't want to have anything to do with the silver. It's not worth it. There's just not any, no reasons to trade it. You got less margin, you got less risk, less slippage, and believe me, the slippage in silver, can be, really, really horrendous when you're doing this. That's the, thing that you have to remember, most of all. Now, yesterday when we were on the show, right before we left, we were talking about the British pound on the daily chart. I'm going to post the daily chart first. This is what we were looking at yesterday because the market was coming right up to the 50% retracement, and we hit it exactly at that 156 level. And since that time, the pound has backed off about $600. And our first profit objective on this British pound would be around the 153.50 level, which is roughly $1,000 lower than where it is now. had you done this trade, now I would put the stop just above the previous high, so you'd basically be in a risk-free situation. That's the best way to handle that, in my opinion. That's, I think that is the best way to handle it. We'll have to wait and see. Now, we also talked about the euro, and I'm going to do that one next. And then these are all related to commodities, folks. So, just remember that all this stuff is money, and it goes through, the hands of all the Forex traders in the world. And that's pretty much, what we're looking at. Okay, I've got to delete a few things here because the swings have moved a little bit, and I want to make sure that I have them drawn correctly. We had a pretty big move last night, and then today we also had one. The market rallied up during the Mario, whatever his name is. I don't know, some Italian guy. But anyway, it went up and touched the high. We were the retracement back from the high we made on the May 1st was exactly 61% of the rally back during this early rally that we had. And then it literally, dropped out of bed. It dropped well over $1,500, in a matter of just a few minutes in the euro currency. It's hit interesting support down here at the 0.618 retracement. But frankly, it looks, with these wide bars that we have, it looks like we want to go a whole lot lower in the euro. That's the way it looks. Now, I'm going to do one other currency before I get into the commodities, and that is the Japanese yen. And this is going to be real interesting because this was the one that we've been talking about because of using this as a proxy, to sell the Japanese stock market, because we know the Japanese stock market has had a pretty good run. Well, you're going to hear somebody really frustrated here, folks, so bear with me. Here's what happened. We came down and we stopped at the Gartley buy, or the first profit objective at 97.33. Now, we sold this up at the 99.40 level, so it came down a great deal. But what I did was, because I didn't know there was a guy talking today, I really didn't, so I had a stop in at 98.30. And that was on the rest of my position. I trade in 3 units. My first unit I took off at the 97.40 level, and then the other 2 units I took off at the 98.30 level because I was stopped out. And I saw that somebody had done something, and I was rather frustrated. Well, I get frustrated a lot in this business, but fortunately the cat that I kick is made out of rubber, and he bounces quite a bit. So what I did was, I took the Japanese yen from the time that it made the high. Oops, we'll cover this when we get back.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, back to the Futures Hour.
Okay, we're back, folks, and I've been asked to go over the trade with the Japanese yen, the Forex trade, selling the Japanese yen versus the dollar at 99.40. Basically, what I've done is, not basically, exactly what I've done is put into the Tiger TV, the long-term weekly chart of the Nikkei going back to 2006 when it reached 18,500. Well, the history of the Nikkei is that, in December of 1989, it topped at 39,000 and change. It just missed 40,000. From 1989, it went all the way down into 2003, where it bottomed just under 7,000. And then we had a rally for 3 years that took it up to 18,000, and then another double bottom down to the 7,000. And what we've done now is we've made a perfect 61% retracement to the exact tick. I mean exactly. Last week, actually it was Monday of this week, in the Nikkei Dow, and at that point we were watching the Japanese yen. And we knew that the Nikkei is traded rather thinly at the MERC, Chicago Mercantile Exchange, and so we decided to put that trade on based on the fact that we were getting some divergence, and that's really what you can do. That's what we're basically watching here, is a proxy to trade it. And if you look at the red line that's on there, that's the correlation of the Japanese yen versus the the Japanese yen versus the Nikkei Dow. And the correlation is better than 90%. So, that's really, what we're watching here. So the trade has started out in the right direction anyway. The first unit was booked, and then we got stopped out of the second unit. We re-entered that second unit today on a retracement that I posted in the room just a few minutes ago. So that's the main thing that we're going to be doing. After we have the break, I'm going to be talking about the Treasury bond market at length, because we have some very important things to talk about there. But before we do that, I'm going to post into Tiger TV. I hope I've done this correctly. I want to give you guys a link so that you can go to the CME newsletter, and you can really have it's a great thing to look at if I can just find it. I will post it in here sometime. Maybe I've already got it ready. I don't know if I did or not. No, I have not got it ready. I'm going to find the link that takes you to the CME that allows you to subscribe to their newsletter. As a matter of fact, if you'll just go to www.cme and subscribe to their newsletter, it's got all kinds of great information in there, folks. It tells you about margin increases, problems among traders. It gives you some trading ideas. It's free, and they don't bombard you with they don't share the email address with anybody. So it's really a really good site for getting information. They have their own educational section there. They do have free things for trading and stuff. So it's a great source of information, and that's what we're all about here at TFNN. Great source of information. And since we're on that subject, we have a new commodity hour just coming on Tuesdays and Thursdays. Andy Hike is a very experienced professional with 35 years experience. We'll be doing a commodity show between 3 and 4 p.m., I believe, every Tuesday and Thursday for TFNN, and that will be, I'm sure, a great show to watch. I will be watching it because I'll get ideas, and the ones that are bad I'm going to blame on Andy, and the ones that are good I'm going to claim for myself. I figured out how to finally do this after all these years. It works very fine that way. But anyway, we'll cover the bonds when we get back from the break. That's the main thing that we really have to look at the bonds, because these are the ones that we're looking at. Right before we finished the show yesterday, we were looking at the high-grade bonds because they were making a 1.2 expansion, and I wanted to see if they have still held. It has not taken out the pattern that we were looking at. So that's so far it's working pretty good. We'll just keep an eye on it here. I posted in here the correlation between the high-grade bonds and the 30-year bonds, and as you can see, the high grades have been the junk bonds have been much stronger. People are always searching for yield and clamoring for yield. So we'll keep watching it and see what happens. I really am expecting, not hoping, I'm expecting the Treasury bonds to get up to that 150 level. We're at 149.07 right now. The report today, whatever it was, I guess it was the one from the fellow in Italy, and that caused the market to back off a little bit. But we still have a really good chance of making that 150 level in the Treasury bonds. Of course, that's a case where you might have unanswered prayers that you might get filled and they could go a lot higher. But this is what stop protection is for. Okay, we're going to take a little break here, folks. 877-927-6648.
Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN. No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com. Now, back to the Futures Hour.
Okay, folks, before we get started with the Treasury bonds, I wanted to post the E-mini S&P over the last a week or so, and it shows all of the ABCD patterns that are there, and particularly the one that Steve Rhodes talked about right before we came on the air, up at this 1593 level. It hit the exact number. The pullback that we had this morning from the early morning Gartley up at 1588 came down exactly to the 61% retracement at 1580, and then back up to the ABCD at 1593. The next move down should take us to about 1585, and then we will find the thing. I will post the link for the CME newsletter into Tiger TV today, just to make sure you get it. I'm pretty sure I'm a former member of the CME, and because you're a former member, you still get all the information and get a few perks just because you belong to the place for several years. And I'm pretty sure it's available to the public. If not, I'll see that we get it to you somehow, because it's got a lot of really great information in it. But I will get that to you hopefully by the next break, and I will do my best to get that to you. Okay, now we want to get to the Treasury bonds, because we have we're very, very close to what we think is a very important sell point in the Treasury bonds, and we've talked about this yesterday. We had a big sell-off of well over 1.5 points. Believe it or not, I mean, I'm just going to put the 5-minute up because you'll be really surprised, folks. You'll never guess where the Treasury bond stopped today during the Mario Draghi thing. It stopped exactly at the 786 retracement to the exact tick at 158.18. And so, that just shows you some of the, they don't always work. I mean, sometimes they hit 618, sometimes hit 786. Someone asked me, how do I know whether it's going to hit the 618 or the 786? Well, folks, if you want to know that, you have to subscribe to my new $35,000 training that I'm making available to only 15 people. I have one spot left. Oh, it was just sold. I'm sorry, it's not going to be made available anymore. It's already been sold. If you believe any of that, you should buy 2 shares of the Brooklyn Bridge and hold on. Nobody knows what it's going to do. You're dealing in probabilities, folks. If anybody tells you they know what's going to do in the stock market, don't walk away from that person. Run away from them. It's all about probabilities, and it's all about risk control, for God's sakes. I mean, anybody that's ever traded for more than 2 or 3 years is going to be able to tell you that without any trouble at all. I mean, it's probabilities. If you could, get to the point where, you knew everything, then that would be great. But there's very few people, that are like that. Okay, now I want to put the chart for the bonds in, and you'll see that, we have a great deal of resistance coming in at the 150 level. We hit the 61% retracement on April the 9th, and we backed off for 5 days. That retracement was very shallow, which tells us that the bond still had some more room to run. And someone mentioned that the only person that knows is God, but I will tell you this, God doesn't trade, because when I talked to her at night, she promised me she didn't trade. So that's how I know that. Anyway, the bonds look like we're really at the spot of no return up here at this 150 level. I think, selling the bonds in the 150 level, with a buy stop above the 150, say 151, you have to risk about $1,000. Then you will be, relatively safe. Well, you're never safe, but at least you're protected. There's a big difference between being safe and being protected. Okay, that's the Treasury bonds. Now, someone asked a question about the Apple. Well, we need to talk about the Apple, because we talked about this many times. We were looking for Apple to get between 440 and 450. Today we took out the high of 2 days ago. We haven't gone anywhere yet, but I still believe that we've got a chance for Apple to come down to the 408 a share. Now, if you're still long some of the calls that we were looking to buy, or long the stock when it was down around the 394 level. There's no reason not to hold on to some of it. You certainly can, but it's already gained well over 25% in just a matter, or 20% in a matter of 10 trading days. And these calls, and they expire because of the not expire. They decay, and you've got to be able to, get out of them. So these are deep in the money now, so you're basically long the stock with a very, very small amount of margin. So that's why it makes it, look pretty good at that particular point. Okay, we got to get to the futures markets, because we got a lot of things going. Okay, the first one we're going to take a look at. I'm stealing the thunder of Mr. Z out of the trading room again, because he was the one who was buying corn about 4 or 5 days ago right into the ABCD pattern, and it had the big move into the 786 retracement. It made the ABCD. It made a beautiful free drive to a bottom down there also, and I should post that into Tiger TV so that you can look at it. But let me explain to you the difference of the contracts that I'm going to be looking at here. The one that I'm posting in now is December corn. That is new crop corn. That's the corn that they're trying to plant now. And the reason why it's so strong is the weather is really, really bad. And so you've got to be able to take that, into consideration, when you're looking at these things, because each contract is a little different. Now, the one I'm going to put in now is going to be July corn that we're trading right now. Now, there's going to be a big gap here, because when there's a difference between the July and the May contract. But I think that the thing that I want you to see most of all, I'm going to do it. I think it's real easy to see. No, it's not either. Just give me a second here to get rid of this this Gartley pattern that's here, and then I'll repost it again, because you've got to see how the market went right into the gap area of the bad report. I mean, to the exact tick. And it's very, very important, because that high that we made back in March, and then the market broke badly and had a huge limit down day, then gapped down the limit, and then went down to the 786 of the whole move that we were looking at. And if you remember now, the December corn was making a huge ABCD, because that's the one that was supposed to be the more bearish. But what's happened is the market, because of some rain, has rallied right to the exact 61% retracement into that gap area. This is telling us a great deal of information of what's going on in corn, folks, because what we want to be doing now, we said we want to be buying corn sometime in the month of May, and guess what? This is May 2nd. Last year it came in on May 28th. We're going to have Rich Anderson on next Thursday from Anderson Capital Management. He's going to have some good information for us on corn, and then also on wheat and beans, of course, and also the live cattle. But we're looking at looking to buy corn very, very soon. I want to have more of a pattern in order to buy it. I'm basically looking at the time. If you'll go into Tiger TV and look at the corn daily chart, you'll see that it's making a bottom last June. It shows it very clearly. Oh, by the way, I'm going to be doing a webinar for the subscribers to my newsletter. That's on May the 15th from 6:30 until 7:30 Eastern Time. So those of you that subscribe to the newsletter are entitled to come in and listen to me. I'm going to be doing a little bit of basic stuff, but most what I'm going to be doing is I'm going to be doing some active things, taking the patterns that we know work. And because you're subscribers, you've seen so many of these patterns work in the past. I mean, they don't always work, but you gotta kiss a few frogs in order to get a princess. So anyway, we'll be looking at some of these trades, and hopefully we'll find. I don't like that word, hopefully. We will see if we can get some better trade setups for you during that webinar that we will be holding on May the 15th of this month at 6:30 Eastern Time. Okay, now I need to switch over for just a second. I know it's quite important here, because we were talking about the gold, and all I wanted to do was switch over to the gold stocks for just a second, because it is the basis of the commodity that we use was the gold stock. It's American Barrick, ABX. It goes back well over 18 months, and it shows the very, very large ABCD that completed down there at that $17, $18 a share level, and it's starting to hold up. And it hasn't really moved very much at all, considering gold has moved $160 an ounce from the bottom. It has not moved very much. This stock is so far from a buy, in my opinion, that I would not touch it. Newmont looks pretty much the same way, and so I'd be very, very careful on these gold mining stocks, because they were a really great buy up around the 29 level, but when they broke. And we were watching that break when it happened. That was the tip-off that gold was, getting ready to break. That 1565 level in gold was such a important level. We mentioned that many times on the commodity show. In fact, it was so important that I'm going to use it in a new book that I'm writing on commodities. In fact, I'm writing it with the gentleman from Wolf Trader, Shane Schmolny, and it's going to be a real interesting book. But we were looking at this particular pattern in the gold as it was unfolding, and I want to bring it up here because it's very, very gives a good idea of what was really happening at the time with the swings and the support, because that's where we got an idea. There it is, right here. And I'll put this in here, and we'll see what's really happening with the thing. Okay, now the gold has made a major bottom, as near as I can tell. And I think the key is the pullback that we should be getting now in gold. We bottomed on the 15th of April. We rallied up into the 1st of May. That's a 2.5-week rally. That's usually all you get in a bear market. Now we need to see what is the quality of the pullback that we get here. If we only make a 382, or we only make a 50%, or do we make a 61% down at the 1385 per share. 1385 per ounce level. So we'll take a look at that. Oh, I have an interesting story for you folks. You know, when I was at Drexel, I did a lot of business with the gold and silver bullion dealers and coin dealers and stuff like that. And one of my friend's son, who was a little baby when I first met him, is a part owner of one of the horses in the Kentucky Derby called Golden Sense. He's one of the 3 favorites. He's also co-owned by Rick Pitino, the owner of the the coach of the Louisville Cardinals that won the NCAA. But that's that horse is going to be around 6 or 7 to 1. If you want a little saver, folks, and take it from someone who bets the Derby ever since he was 7 years old, I haven't missed one yet, and I've only won on about 2, so I'm due. That's all I can tell you. I'm due. I like a horse known as Will the Lead. No, I can't even remember the name of the darn thing. Oh, well, Will Take Charge. It's Will Take Charge. It's a very good breeding in the horse. He's going to be a big long shot. He's going to be about 30 to 1. He's only run one race that he won, but he comes from wonderful breeding, and he should be about 35 or 40 to 1. And the last time the trainer, Dwayne Lucas, had the horse like this in the race was, I believe, in 1997 or 1996 with a horse called Thunder Gulch, who had never won a race, and he won the Kentucky Derby at 35 to 1. I was with Mark Douglas that day, and it was quite exciting. But anyway, it's a fun race to watch. Bet $2 to win, $2 to place, $2 to show, and if you win, donate the money to somebody that's homeless. That's my recommendation. So we'll see what happens with the next thing. Now, I'm going to give you my bird's eye view of what I think is happening in some of these markets and what it's related to. And we talked about it on yesterday's show, and this is what we were discussing this yesterday, and that is the big ABCD that was happening with the dollar index. We were talking about the 81.30 level, how important it was because you had a perfect ABCD level there. This led us to look at the British pound, selling it around the 156 level. I know these are not commodities, but they're more fun than commodities. They're safer than commodities because they trade 24/7. They have thousands of times more volume than the commodities, so they are tradable. It's something that that you want to look at. I mean, just because it's, I know this is the commodity hour, but fortunately, I happen to be the person running it, at least for the time being. A couple more losing trades, and that might change. But anyway, the level that it hit yesterday was just absolutely spot on. So as long as that dollar index stays at 181.30, it's got a chance to really move. The fact that the euro dropped $1,500 in a matter of minutes today tells us that there's something really not right with that particular market. That's the way it appears to me at this particular time. Okay, now someone had a question about Apple at $450 a share. The only reason I picked $450 a share out on Apple as a critical point is that's the high we made on the last rally. This is the strongest rally that we've had since the bottom that we made in January. That's the end of the story. That's all I know about it. I don't know any more than that. I wish I did. Okay, we got to take a break here. 877-927-6648.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com. Now, back to the Futures Hour.
Okay, folks, we're back, and I've posted into Tiger TV the long-term weekly chart on the NASDAQ because we are approaching, in fact, we just hit it just a little while ago, the long 1.618 expansion. From 03 down to 07, we've made a 1.27 expansion of that one, and we're at the, I believe, 50% level of the whole down move from March of 2000. This market is nothing like March of 2000, folks. I mean, it was crazy time there. It was a once-in-a-lifetime, speculative bubble that we had, and, of course, it went away, and, most of those stocks don't exist anymore. But the next one that I wanted to bring up, and it's very important because this is the one that I really gauge the stock market on, and that is the New York Stock Exchange Index. We have taken out that 786 level that I was looking at that 90 level. We're now at 9240, so we've broken down there. We're looking at on a daily basis. We're looking at a very short-term reverse point wave. That completed yesterday, I believe. I'm going to focus that one in my newsletter, coming up this weekend. But it's going to take a while for that pattern to finish, if it isn't in fact the case. But if it is, it's going to be very important. The most important thing about the New York Stock Exchange Index daily chart that I posted here today is the fact that the gap that we had around January, I believe it was January 3rd when the market reopened, or January 2nd, and we left that monster gap there. The only other time we've left a gap like that was the island reversal gap that we left last May. And, now we're coming into May, so we're going to have some time things that are going to be matching up with this. But the main thing is the fact that that gap will be filled. In fact, they'll both be filled. I don't know if they'll be filled in my lifetime or not, but they will be filled because there's no gaps on this chart going back as far as you want to go. So unless this is an aberration and we're wrong this time, which is possible, we'll see. But the gap is down at 84, and that is, a very, very strong correction. And the market is so overbought. And that doesn't mean overbought markets can't go higher and higher and higher. Believe me, that's, I've seen them do it. I watched it in March of 2000. I watched it several other times. And, that's, you just got to stand aside and, give it a little bit of a run, and then we'll see. I think that we're pretty close. But I really thought we were very, very close on August the 11th, and that was April the 11th, and that was the short-term high. Then we went down and stopped at the exact 61% retracement, and then, we've gone up again. But we've got some interesting patterns forming in this New York Stock Exchange Index that I'll cover, at a different time. I have to remember now that I'm going to post into Tiger TV the CME newsletter link that you can go to subscribe to it. I really believe that you can. I get it once a month. I used to write articles for it, but I just don't have the time anymore. But they do have some really good stuff that's in there, and the dates that they have of the reports and open interest changes. One of the things that they featured this week is that move in the Japanese yen last month that we had. All during the month of April, the Japanese yen was, collapsing to the dollar. The dollar was rallying against yen. Well, open interest increased by 150%, and volume increased by 330% at the CME. Those are the futures for the contract. Now, remember, the futures is less than 1% of the Forex market. So you can imagine the amount of transactions that went on in the Forex market if the futures market increased by, 150%. So that's a pretty big deal. Listen. Live everybody, have a wonderful day, live every day in an attitude of gratitude, and may God bless.